Hi, and welcome back to the Life License Qualification Program video series. In this set of videos, we're going to carry on with our discussion around group insurance benefits. So, we've looked at the basic structures of group insurance benefits, why we put group insurance contracts into place, who acquires group insurance contracts. I'd like to spend a few minutes talking about the pricing of group insurance contracts. We don't really talk about the actual dollar amounts, but I'd like to show you how group insurance contracts calculate their premiums. So here's what happens with a group insurance contract. That we're going to assume that we're getting group insurance for the first time. So we have an employer acquiring premiums or acquiring a group insurance contract for the first time. So the first instance where we calculate premiums, it's actually pretty straightforward. It's much what you would expect from the rest of your experience with insurance. We're going to look at a cost of insurance, and we're going to look at some expenses. Now, a little bit of a difference here. We don't have a direct investment component with group insurance. Group insurance works more like term insurance. It's really about the dollars in and the dollars out. So the cost of insurance becomes a little tricky though, because we're not looking at just one product at a time here, and we're not looking at all groups that are necessarily the same. So the cost of insurance here is going to be based on the size of the group. Obviously, a larger group is going to have higher premiums. It's typically the per member costs we're really concerned with, though. We're also going to look at the actual benefits. There are significant variations in the types of benefits or the amount of benefit that we can offer to plan members. Some group insurance contracts are very robust, offer an extensive range of benefits, and are therefore more expensive. Other group insurance contracts carry a lower cost because they have more limited benefits. Now, we have to look at what we would consider in an individual contract mortality and morbidity. But this is not exactly the same with group insurance as it is for individual insurance. See, it's a lot harder to calculate that mortality and morbidity, especially given that we have fairly limited underwriting information. There are some elements of underwriting here. We'll know in most cases the ages of all the people in the group and the genders of all the people in the group, so we can apply some of that and get kind of a rough idea about mortality and morbidity, but it's not really going to tell us what we need to know about the utilization of, for example, drugs and dental benefits in the group. So instead, what we're going to do is we're going to look at, again, the size of the group. For a very large group, what we're going to do is we're going to really take another similar group and we're going to use their experience. So if we think about it this way, we have experience, and when we have a large group, we can say that large group is going to have the same kind of experience as another large group. Two groups of 1,000 in a similar industry, in a similar geographical area, can it be expected to have the same types of claims experience? But two groups of 10, that's going to be a little bit tougher. So when we have a group of 10, we can't necessarily assume that that group of 10 is going to have the same kind of claims experience as another group of 10 in the same industry, in the same geographical area. So there we have to do some manual underwriting. That is, we have to manually calculate what the claims are, really now taking into account more of the individual mortality and morbidity information for the plan members. But that very large group, well, here, we can go straight to the experience of another comparable large group. If we're somewhere in between, then we have a blended rating. So for a small group of, say, 10, we're going to use this manual underwriting method. For a very large group of, say, 1,000, we're going to use the experience method. For a mid-sized group of, say, 50 to 100 employees, we're going to use a blending. Now, it's not necessarily that clean. I said this is a group getting insurance for the very first time. But if we have that small group, let's say that 10 or smaller number of employees, we will have, over the passage of time, a good idea as to what their experience is going to be. So a smaller group, given some time, will start to gravitate more towards the experience rating. After they've been on the plan for 3 or 4 or 5 years, we're going to have a pretty good idea what it costs to insure them year after year, and then we can start to move more towards the experience rating. So experience, the ability to use experience to calculate claims, comes with two things. It comes with the size of the group, and it comes from the passage of time. Now, related to this idea would be the idea of credibility. And credibility refers to what extent does something that happened with the group in a given year really mean that there's going to be a change in their costs. So smaller groups tend to have lower credibility because in a small group, say a group of 10, you might have 1 year where nobody goes to the dentist. Well, does that mean that in the following year there's not likely to be any dental claims? Probably not. But if you have that group of 1,000 people and you have a year where there's reduced dental claims, well, maybe it means that there's been some change in the overall composition of the group and they're less likely to use dental benefits going forward. With that group of 10, we wouldn't assign a lot of credibility to the situation where very few of them use the dentist in 1 year. Maybe if we went 3 or 4 years where there was less use of the dentist among that small group, then we would assign some credibility to that and we would decrease the premiums accordingly. So this is just a quick look at how the premiums for group insurance are structured. If you end up doing a lot of group insurance business, and it is a fairly specialized business in a lot of cases, if you end up doing a lot of group insurance business, you'll get very familiar with how group insurance and group insurance renewals work. But for the time being, this is a good overview, and this should help you to understand some of the basics of the structure of group insurance. Enjoy your continued studies, and we'll be back with more videos to cover group insurance in its entirety. Thank you very much.